Also joining us is Vineeta Sharma. Vineeta, what's your first take on the earnings from Infosys?
So, see, earnings are almost in line with what we are expecting. Just the net profit EBITDA margin is a little tad lower than what we were expecting. Though it is quite understandable because the wage revision of around 15% employees of the senior management was due for this quarter, and that has definitely taken away some of the rupee gain that the street was expecting. Also, like others have been talking about, that in TCS or Infosys we have not been able to see the rupee gain appreciation. That is also in what I feel is that most of the large caps, they have a fixed hedging policy, and the kind of rupee gain that normally is reflected in by a lag, unlike the mid cap companies in which you can see it immediately happening in the same very quarter. For the large cap, normally it happens in with a lag. Also, this time what the margin has been reported is very much in line with what the management has been guiding earlier. 22 to 24% is the guidance that they have given after some Q4 2018 expectation. They have curtailed this margin, and this is very much in line with what guidance has been given. There is huge amount of investment the company is making in the right direction on the digital space, like they are also on the localization in the US, some increased investment in some training in the digital space, increased investments in sales capabilities towards the digital now has 28% of the total sales of Infosys. So I think the company is investing in the right direction. Definitely, if you consider, some short-term losses for future pains, I think the results are pretty okay from my side.
Amit, when you're looking at the client additions, you'll see that in the 100 million plus band, they've lost one client. In the 50 million plus band, they've added two. And in the 10 million plus band, they've added five. So there are no major kind of big client additions coming through. Do you think this could also be one of the triggers going forth?
So we should see the growth in digital has been pretty strong, and the data spend is basically from clients which are in the 10 to 50 million dollar bracket. So the loss in one big client is a reason for worry, because if you see in the case of TCS, they have seen a pretty strong addition in that US dollar 100 million bucket. So that I don't think so. There is no as of now we should read very much into it. But the thing is that for Infosys, the kind of growth they are seeing in the digital revenue is pretty encouraging. So in this quarter also they are seeing pretty healthy growth, and that is the metrics that the street is looking for.
Sanjeev, this quarter attrition also has come off slightly, but even yet it remains at very elevated levels. This is not something that the market really has been looking at very strongly over the last few quarters. It's always been growth, and this quarter it seems that margins, that's the new major theme that the market has been looking at. Even in TCS, most of the brokerage houses were worried that the margins were not all that great, and even the views that all of you all have given today on Infosys, it also comes down to the margins again. But I wanted to just touch upon attrition and what you make of it. Do you think it's a sign of worry? 22.2% is what has come through this quarter versus 23% in Q1. So it's come down, but still remains 20% plus.
Well, I think that will get mitigated by the order inflow and the volume which they have seen and the volume growth which they are indicating. But yes, attrition is a difficult vertical to handle, and the levels are fairly high for Infosys. The only caveat here is that these have, like I said, in the last 1.5 years IT has been the poster boy, but the problem is at 74, 75 also, if your margins are not being aided by the rupee weakness, then inherently either the companies are perfectly hedged, or there is the vendors are equally stable on the business which they passed on. So if on the other hand the rupee starts to appreciate, then what would be the case there? That would be the thing to point. So like I said, these have been huge wealth creators, but I think they will meet with profit booking on every rise, since markets have been very, very overweight on especially the large ones like Infosys and TCS.
Right. Vineeta, again, a question to you on the same front, that the last quarter, Q1 and Q2, generally seasonally they are stronger quarters, and this is where a majority of the performance comes through. In Q3, Q4, there are a lot of furloughs, there are a lot of holidays, and hence these kind of growth numbers do not surface. So again, the point that Sanjeev is making, do you think that for the interim, the best may be behind the larger top 3 or top 5 companies, at least for the current financial year?
See, what our take is for Infosys is that Infosys is in a building phase now. It is, started up again for us. So as management has also been guiding that FY19 will be a base building for Infosys, and FY20 they will be going in to build up some momentum, and FY21 would be the phase when they will fully catch up the digital space and the whole revenue what they have lost because of the margins that in the past. See, right now, if you understand, there have been quite good deals that Infosys has taken in the past 2 quarters. There has been one US, I think, telecom companies, big deal they have signed off. They have had a joint venture with Temasek. Also, so if you, and they are there are deals which they are taking it for long term, some 2 to 3 year deal. So that gives some kind of confidence in the kind of top line cushion that we have for the entire Infosys company, and also for the industry, because BFSI is also, which has been an overhang for of late, it has started picking up. So last quarter also we saw some softness. For Infosys particularly, BFSI is gaining up momentum. Also Europe was lately facing some issues which we are expecting. I have not seen the entire whole fact sheet, but I am expecting Europe also to do better this time. BFSI contributes a huge chunk on the energy and also on the retail side. They were I'm seeing a lot of ramp up of new deals, as well as all the previous ones are getting refined and rewritten. So I think Infosys in a building a phase, and top line should not be a concern going forward. Management has clearly understood how they should move ahead from here.
Amit, the INR benefit, the rupee weakness benefit, that's also been captured in the margins, but even yet, most of y'all aren't very happy with the margins. So how much, do you have any first, initial numbers to how much benefit has the company got from the rupee depreciation? And secondly, what happens if the rupee had to go ahead and strengthen, let's say 2 points or 3 points to the US dollar? What impact would that have?
Like the margin has been a negative surprise, but what we should basically look at Infosys is the large deal wins, right? The large deal wins which caused the $2 billion bracket, which is a very positive sign. So as like earlier also said that large deal wins is the key for growth, and last quarter they have done $1.1 billion of deal wins, and in this quarter they have done $2 billion of deal wins. So the large deal wins is the thing which is which is really encouraging me. And also, as I said, in terms of margins, so they have been investing in the onshore capabilities and enhancing their digital capabilities. So that is eating up some of the benefits that they have gained from the rupee, right? But the company has a policy wherein they want the margins to be in a particular range, and we are also expecting the margin guidance to be slightly upward. But it has been a negative surprise, but we'll have to see and we'll have to hear from the management that what their take is, and then regarding the margin guidance.
Right, and the management will be talking to us in just about 20 minutes from now. Sanjeev, another one point was the guidance. Not many were expecting any kind of tinkering with the guidance, but even yet the management has reiterated that 6 to 8% growth as far as revenues go for the full year, and also their margin band, they've kept it unchanged for the full financial year. So do you think that these two statements could also add a little bit of a positive support for the stock, or do you think it's already in the price?
So, we are not seeing that the stock is going to sell off in a big way. These have been bellwethers, and they've taken the maximum advantage of the upside in the US business cycle and benefited both from that and the added tailwind of a weak rupee. All I'm saying is that the real kicker would have been if the margins had expanded because of the inherent weakness in this quarter. But I would say it's a stable quarter. They've guided for a relatively steady quarter going forward. And like I said, I think the 600, 650 would be another ideal stage to buy this. We think over the next year, a 10 to 12% upside in the stock, depending on the rupee, would be on the card. So Infosys is one of the most stable, along with TCS, as in the business on the Nifty components. Only thing is there is going to be no runaway upside and neither downside. So I think it will be status quo for the time being.
What kind of price targets do you have on the top three, Infosys, TCS, Wipro?
So for TCS, we have an upside of 2050 to 2400. On Infosys, again, we think 750 to 800 could be the target there. But HCL Tech would be our dark horse, where we think 1250 rupees could be on the cards by the end of financial year 2018.
All right, many thanks, Sanjeev, for joining us. Vineeta, again, before we let you go, your thoughts on the stocks, and is your team going to probably change any kind of price targets? Do you think that this result warrants that, or will you stay with it? And what's your price target recommendation on the Infosys stock?
See, price target for Infosys right now, we are not going to change because the PAT is almost in line with what we were expecting. We need to just understand after the con call, we'll take a view on that. Right now, I think the price target will remain same. We have been expecting 824 rupees as a price target for the company, and it is warranting in 17.8 times FY20 earnings is what we are expecting. So on a 20 times forward earning, 824 should be the price target that we're expecting. Also, if we see TCS as well as Infosys, both the comparison, if we are seeing, there is a lot of headroom for valuation catch up for Infosys, and that's the reason, because now what the company had missed in the history, they had missed on the top line, and because they wanted to protect the margins, and that's the reason why TCS went up, gathering on all the contracts, and Infosys were little lagged behind. So Infosys is now concentrating rightly on how the top line has to be built up. Things are in favor, BFSI, things are, pricing is stable, things are moving up better. So the margins is okay, little tad lower than TCS, but then it is inching up towards the same thing. So I think the valuation gap right now between Infosys and TCS is there. I think that should also do some catching up.
All right. Many thanks, Vineeta, for joining us. Amit, last questions to you as well. What are the couple of things that you're going to be waiting to hear from the management, which could be potential stock movers?
Yeah, so we would be looking for some clarity on the attrition front. What the company is doing to lower down the attrition, because that is a big concern for us. And also their outlook on the guidance on margins. Like as I said earlier, that what kind of investments they are, what kind of investments they have increased basically, and how we can see the margins going ahead. So margins would be a thing that we would like to watch out. And also
one point that they have kept their margin guidance at 20 to 24% range for the full year. They have still retained that.
Yeah, yeah. So, what's the reason for that? Basically, are they investing more into, sales, or, what kind of investments they are looking in?
All right, and one last question:
Yeah.
what's your call on the stock and price target?
Yeah, so we have been buyers on Infosys and TCS both. So, as rightly said, the valuation gap between Infosys and TCS is actually widening. So right now, the valuation gap is around 25%. So we think that the gap can uh, uh, lower a bit, and some catching up can be done by Infosys. So we have a buy with a target price of 815 rupees on Infosys.
All right, Amit, many thanks for joining us and sharing your views with us on Infosys. Overall, it seems to be reasonably steady quarter. Slight bit of worries or concerns coming through as far as the company's margins go, but I'm sure that we'll get some kind of clarification from the management on that front. So it'll be interesting to see how the stock really reacts in trade tomorrow. But apart from that, the management will also be talking to the media at around 20 minutes. Okay, so I suppose the management is just entering the premises, and we have visuals of that coming through. That's the Infosys management getting ready and just entering the premises where the press conference is going to take place very shortly. And quite a few points that Amit pointed out. One on the margin front, that will be one major clarification. They've also gone and said that they have signed